Hello, everybody. Thank you so much for joining me and getting ready. Yeah, it's going to be great. We'll be starting the show very, very, very shortly. Hello there. This is James, and I'm one of the many sales managers here at FXPRIMUS. And welcome and thank you for joining us on our very first episode of Primus Live. Now, before I introduce you to my co-host, remember these little live streams are for educational purposes only, and in no way whatsoever be taken as advice. I always suggest you do your own research and your own due diligence and know the risks at hand before entering any trade. With that out of the way, let me give you a brief introduction on my co-host today. Today, I'll be joined by Kaia, who is our senior market analyst here at FXPRIMUS and has worked as a portfolio manager and an investment manager for both the retail market and the investment market, and the private market, in fact. Before joining FXPRIMUS, Kaia was a senior investment associate at a hedge fund in Singapore and a vice president in Bank of America, Merrill Lynch. Kaia, welcome.
Hi, James. How are you? Thank you for having me.
My absolute pleasure. Pleasure is all mine. Thank you for joining us today. How's your day been today? You've had a good day?
This day has been busy. Watching the markets, watching what's happening globally with COVID and what's happening with the economy. So definitely busy day as always. What about yours?
Absolutely. Busy as well. Busy as well. I'm obviously been watching the cable a lot today because the cable was doing a fair bit of market activity today. So that's always interesting, especially with obviously the date tomorrow, the 15th for the Brexit, no deal, whatever fiasco going on. But anyway, this is going to be, like I said, very first Primus Live. So today we've picked a very interesting topic to talk about. A topic which is on the minds of many, many traders, and that is the introduction to technical analysis. So take it away.
Yeah, so we chose this topic today because with the recent market developments, seeing a lot of retail investors coming to the markets, we have received a lot of questions. How should we analyze the markets? Should we use the fundamental analysis or should we use the technical analysis? And just to give you a brief definition, I shall say, what is technical analysis? It's an analysis type that uses patterns on the charts to predict and also observe the markets. And if we compare technical with fundamental analysis, fundamental always uses financial statements. You always have to have some sort of cash flow. You have to have some sort of assumptions about discount rates, and you come to an intrinsic value of some sort of asset class or currency. And there's one of my favorite quotes on the slide as well, as you can see, coming from Keynes, saying that the markets can remain irrational longer than you can remain solvent, meaning there's no difference between being right at the wrong time or being wrong. Either way, you're not going to get the gain or the profit that you want. Whereas technical analysis, market value is the real value, or market price is the value. And it's predominantly using historical data, putting that on a chart, using some sort of technical indicators and looking for trends and patterns that would help us to see where the price may be going.
So, like I say, in a nutshell, what you just described, fundamental analysis tries to establish a potential intrinsic value of an asset, either currently or maybe in the future. With technical, we look at the history and patterns to try and identify trends, possible change in direction, entry, exit levels, and maybe levels for take profit and stop loss. Is that right?
100% right, yeah.
Perfect. Now, like I say, this is an introduction today. On later episodes, we probably go into a little bit more depth, but we're going to discuss quite a couple of popular technical indicators, which I think the first one is moving averages. Is that right?
Yes. So technical analysis entails so many different variables and then a lot of different indicators to use. So we're going to start with a few basic ones, and one of my favorites is moving averages. So definition, again, super easy. It's literally the average of closing prices of a certain time frame that a trader wants to use. The market practice generally is to use 5, 21, 34, 50, 200-day moving average. Or it can also be not a day, but some other period. For instance, a minute or an hour or 5 hours. Depends what type of time frame the trader wants to use. So moving averages are great because these help to also show the change in the trend. For instance, the crosses. 200-day moving average crossing with 50-day can be either a golden cross or a death cross. Depends which way you look at it. But I think the best, yeah, go ahead.
I say, so death cross obviously is when we see a change in direction going downwards. Which, you know, if you're short selling, you want to see that. And a golden cross, obviously, is opposite as a trying to identify if it's a trend is changing direction upwards, which is if you're going long, it's what you want to see. Is that right?
Correct. Yeah, and 200-day moving average is very important indicator when it comes to technical analysis.
Okay.
James, how about you show us?
Yeah, absolutely. Let me go on to my MT4 chart, and we'll actually show you how to put these sort of you know, the moving averages on your chart. Now, at the moment, I have the euro dollar. Here we go. So I go to this is on my MT4 platform, of course. So insert indicators. Trend, because as we already mentioned, moving averages can be used to identify a trend. So moving averages, and you want to do a pretty rainbow, don't you? Is that right?
I like the rainbow colors. Yeah. So let's use 7 different time frames. Let's use 7 different colors.
Perfect. So the first one, what should we go for?
Let's go for 8-day. That's my own personal preference. It helps to with day traders quite a bit.
Perfect. And what color should we go for 8-day?
We go for red.
Go for red. Excellent. So here we go. Click it in, and there we go. Now let's put another one in. So indicators, moving averages. Next number. What number would you like to go?
We're going to use 21 because that will be our average price on for a month. So monthly mean.
Perfect.
And we go for orange.
Orange. Okay. There we go. Orange it is. And next one we're going to put in
34, and we go for yellow.
34 yellow. Okay, I like this. Yellow. Perfect. It's 50 next, am I right?
50 and green.
50 in green. Perfect. And next one?
100 will be indigo or blue.
Blue. Go for a nice dark blue here. There we go. And finally, 200, right?
The important one will be purple.
200, which is going to be purple. Perfect.
So now, and whenever you see these moving averages stacked in a rainbow manner, that will indicate the trend. Meaning if the red is on top, you have a very clear upward trend. When red is at the bottom, you have very clear downward trend. So the stack color helps visually. Humans are very visual, you know, when it comes to absorbing data. So I find this color coding helps a lot.
Perfect, perfect. And it looks very pretty as well, doesn't it?
It looks very pretty, of course.
Useful and pretty. That's always the best way. Okay, what's the next indicator we're going to discuss?
Next, we're going to choose Bollinger Bands, which I also love. Bollinger Bands don't show us really the trend, but they sort of show us where do we stand, I shall say, within the range of the price movement. So it helps us to identify oversold or overbought levels. And again, to give some sort of definition as well, it helps us to see how many standard deviations the price is away from its mean. A bit statistical terms, but you know, everybody can Google, they can just see what these things mean. And the logic behind Bollinger Bands is that price often acts as a rubber band. It reverts to mean, meaning the moment it's going to stretch away from the mean, it's going to snap back at some point. And that's what we as traders want to identify. Once we have identified a trend, we also want to identify a good entry point. And that's exactly why we use Bollinger Bands.
Perfect. And invented by John Bollinger, I believe, in the 1980s as well.
True.
Useless trivia, don't need to know that part. Should we show the good people how to put Bollinger Bands on our charts?
Please.
Okie dokie. Brilliant. Well, this time I've got gold. I'm going to put this in now. So it's an oscillator. No, it's not.
It's an
It's a
oscillator.
trend. So it's a trend. So it's Bollinger Bands. So click Bollinger Bands. Period of time. You happy with 21?
I love
Deviation of
21 because it shows exactly
Perfect.
the average price for month.
Exactly. Perfect. So there we go. Click it, and there we have it. We have our Bollinger Bands on our chart. The other thing I quite like about Bollinger Bands is that it sort of gives you when the market is sort of ranging. The bands, the top band and the bottom band are obviously quite close together, so you gives you potential levels of resistance and support. And obviously then when you have a big movement in the market, like you can see in my chart here, the bands get a lot wider, and it sort of shows you how volatile, there's a lot of volatility in the market. So I am a big, I do occasionally use Bollinger Bands as well, so I'm a big fan of them. So anyway, that's how we put Bollinger
One more
Bands
comment on that. 90% of price action actually takes between the bands. So whenever you see the price going outside of the Bollinger Band, there's a very high likelihood that it's going to snap back at some point. However, if there's a very strong upward trend, the price can actually remain above the upper limit for quite some time. So never used only Bollinger Bands, use this to complement the moving averages.
Absolutely brilliant point. Very good point indeed. Okay, so let's move on to the next one, which I think is the Relative Strength Index, RSI. Am I right?
Relative Strength Index, indeed. Again, RSI, as it stands for Relative Strength Index, is used for overbought and oversold levels. It's an oscillator, meaning it moves between 0 and 100. Often, traders like to use 70 as overbought levels and 30 as oversold. Myself, I like to use 90 and 10 just to identify that this really is the peak level, critical level.
Yes.
And it helps to show us the strength of the trend, not really the direction as such. People like to use 14-day period. Again, I'm the 21 type of girl. I like the 21 time frame. And for the technical side of it, it uses actually average gain and average loss within certain period, normalizes that number, and then applies slightly more weight to the current price movement. And that's how we get that number.
Perfect. Perfect. Let's show the good people how we add it to our MT4 chart.
Yes, please.
So, okay, here we go. I've still got gold here, so I go to indicators. This is an oscillator, the RSI. So, we've got the oscillators, RSI, Relative Strength Index, and we want 21 because that is our favorite number. Add it in, and there you can see it. It comes on the bottom of your chart here. Again, as Kaia said, if it's above 70, and I agree very much with what you said, if it's extreme like 90, that's how I tend to react, or at 10 below 30. So remember, as Kaia said, if it's above 70, potentially the asset is overbought. If it's below 30, potentially the asset is oversold, which, as we've already said, this is an early warning indicator where some traders watch this to try and see if the market might move the opposite direction in a, in the short term or medium term. So as you can see, like over here, so over you see here, this is an interesting bit. It's under 30 here, and gold indeed started to, it was under pressure at this point, under 30, and then obviously the market started to jump in and buy in again, and that started pushing gold up a bit higher. So yeah, that's what the RSI is often used for. And our final introduction to our indicators today, I believe, is stochastics. Am I saying that correctly?
Yes, you're right, James. We're going to focus on slow stochastic to be specific. And there are two types. There's the fast, there's the slow one. I tend to think that the fast one may be a bit too aggressive when it comes to signaling. That's why slow is my personal preference. And when it comes to stochastics, it really shows where does the price at the moment stand within the range within a certain period of time. And I've given an example on the slide that if we use K of 80, for instance, it means that the price closed above 80% of all prior closing prices, meaning it's really at the top 20% of the previous periods, and helps us to see, are we likely to see a price drop, or are we going to likely to continue the trend going on? And it's an oscillator, again, moves between 100 and 0. And to complement the slow stochastic, there's an additional variable K, which is the moving average of that D line. When these two lines cross, that's a signal for us traders. Oh, I see a cross, potentially the trend might be changing. Or if the stochastic is below 40 or above 60, that's an indicator that maybe that's an entry place for us. But let's see on MT4 again. How does this look?
Why not? Let's do that. So, okay, indicators again, oscillators, as we've already said, stochastics. There you go. I hope I'm saying that correctly. It always sounds weird when I say it. Add it in, and hey presto, there we go with this. It's on our chart as well. Now you like having both the rainbow colored moving averages, the stochastics, and the RSI and the Bollinger Bands all on the chart at the same time. Isn't that right?
That would be a bit too noisy. So what I have the luxury of having multiple screens. So what I like to do,
Yes.
I put my moving averages on one chart. I put my stochastic and RSI on a separate chart. And Bollinger Bands, I can complement or sort of add to the moving averages, or I have a separate chart for that. And the sort of way I run my searches, or I run my trade assessment is, first of all, moving average always. I'm a trend follower. I always trend the momentum. I want to see those colors nicely stacked. If not the full rainbow, at least I want to see 8 and 21 stacked. And how do they stand in relation to, let's say, 50 and 200? 50 and 200 are important because these are used by large hedge funds. And hedge funds, whether we like it or not, they make a lot of market. So we trade against them. So if something reaches near 200, you are pretty sure that big boys are going to take some sort of action.
Yeah.
And then once I've identified those moving averages, I want to see, am I good to enter this trade right now? Like, great, maybe there is like upward trend, but I'm just going to not jump in. Maybe it's going the wrong direction. So I want to see some pullbacks every now and then. So I like to see price pulling back to 21, 34, or 50-day moving average. And then I would check my RSI, I would check my Bollinger Band, and I would check my stochastic as well. Do these three indicators confirm that there's a pullback? And do they confirm that there's a strength in that pullback? And that's how I identify, maybe that's a good entry point. And James, you know what's my favorite part?
What's that?
My favorite part is that you can do everything right, but the price can still go to the wrong direction or the other direction.
Absolutely. I mean, to be fair, let's be open. If trading was that easy, people would currently be looking at an empty chair and an empty studio because we'd be on the beach somewhere making millions. But yeah, I think you made a really valid point. So I love your strategies. What you say is that unless you get, I mean, almost these key indicators saying pretty much the same thing, you then don't make a decision. You don't base it on one indicator only. You base it on the messages being given from several of them. And I think that's, because patience, in my opinion, is one of the many things. I'm a very patient trader. I don't like to rush in. I like to take my time and only go in when I'm pretty confident that the market is giving me a pretty good signal. I never really go in on a half-based judgment. I do like your strategy being very, very, very similar. I think we've got a couple of questions, actually, which we've been kindly being sent in. Now, one of the questions you mentioned, you started talking about this at the beginning. Again, it's to do with moving averages. And the question is, why is the 200-day moving average such an important indicator?
That's a great question. Again, 200-day moving average is used by so many institutional traders, and they use this as a sort of line between the bear market and the bull market. Whenever the price is above 200-day moving average, this is often that there's a long-term bullish trend in place. And price movements tend to be less volatile, slightly more smoother. However, once you see the price dropping below 200-day moving average, volatility generally tends to spike. Movements are much more rapid. And I would actually caution beginner traders to be careful at that point because movements can happen fast and, unexpected directions as well.
Absolutely, very, very true. I mean, like I say, it's the sort of moving average that most analysts talk about and view as the 200-day moving average. So it is vital. There's another question, which again is, what analysis is used by market participants more, fundamental or technical? So what sort of analysis do you think is more popular in the market?
I would be guided by the fact that 70% of trading is actually done by algorithms these days.
Yes.
We don't see regular people going to the markets and actually trading big volumes. Yes. Generally, it's the computers, it's the algorithms who are all momentum based. Maybe I shouldn't say all, but I would say predominantly momentum based. So technical analysis, statistics, that is exactly what they use. Yeah. But on the flip side, of course, you have big, let's say, funds, investment funds, hedge funds that have certain strategy, let's say they want to find deep value in the US energy market, they will do the fundamental analysis for sure. They will go through the financials and they will have some sort of fair value for that particular asset.
Absolutely. Actually, it's interesting that I remember back in the day, many years ago when I first started out, I was in a gold trader, and it was very fundamentally based back then. It was very fundamentally based, and we used to do great big studies and all this, etc. Very technicals didn't really exist to me back then, but then as soon as I got more into the currency market, technicals became dominant. And though I am at heart, because I'm old-fashioned, I am very much still a fundamental trader. I cannot deny the importance and how popular technical analysis is. And I think you're absolutely right. I think that is the main thing that people do look at, certainly when it comes to currencies in particular. I think technical analysis is sort of the key player on that. The other question I hear is...
I'll just add one comment that history tends to repeat itself, right? Mark Twain has said that history doesn't repeat, but it rhymes, meaning that technical analysis has proven to become profitable for a trader if they adhere to certain rules and if they can remain calm. And you know, trading psychology is a very broad topic that we may discuss at some point during these webinars. But actually, adhering to rules is the key to success when it comes to technical analysis.
Well said. Very well said. We got another question here as well. I think it's pretty much, we've already talked about it in the previous question. Can you combine technical and fundamental analysis together?
I would say yes, meaning that, again, when certain institutional investors want to buy an asset that they have determined the fair value is X, but it has slightly moved, perhaps they will apply technical analysis just to see, should we enter now, should we wait? So I think it's great to combine these two. I have done this in my previous sort of career as well. Identify a asset that's below the fair value and then see from technical perspective, should we enter now, should we still wait? What about you? What's your experience with that?
Like I say, I'm a bit old-fashioned, so I am more of a fundamental trader, but I have embraced technical analysis over the last 10, 15 years or so. I do, again, combine the two. Again, I look for the intrinsic value, and again, I use technicals for potential areas of interest, I like to call it, maybe buy-in or selling levels. At the same time, I do actually combine a lot of market sentiment as well. I do look at that a lot, and I try and combine the three because I tend to believe at the end of the day, to get the right answer, you have to look at the overall picture and take all views in. So I do think there is a role for both fundamental and technical analysis to work together.
Yeah, I agree.
A final question: what asset classes are best for technical analysis?
That's a good question. I would say that predominantly used for Forex, because for Forex, it's very hard to find fundamentals as such. There's no cash flows. Yes. You can talk about maybe the economy of the country and such, but it's not really fundamental when you compare with equities. So you can apply for everything. Forex, commodities most likely are the best. Crypto seems to be pretty good for technical analysis. But at the same time, let's say options on equities, predominantly all technical analysis.
Absolutely, totally. I mean, currencies in particular, like what we mentioned beforehand, that is very technical based. There is obviously fundamental economic indicators can affect it. Mainly people do look at technical analysis a lot when it comes to the currencies. Very much so. But that's brilliant. Thank you so much. Oh, sorry, Kaia.
No, I was just saying 100% agree with you, James.
Yeah, there you go. Sometimes I get it right. Sometimes I don't. Brilliant. Well, that's all the questions. But thank you so much for those questions, ladies and gentlemen. I really appreciate it. So that is our very first Primus live show. How do you feel? I think it went good. Don't you? I hope people are enjoying it anyway.
Yes, I was just going to say, I think we have a question actually. My production assistant.
Okay.
Can you see it on the screen, James?
I see this. I was told to check the parabolic also. What do you think? What do you think of that indicator?
Parabolic SAR. It's a great indicator, something I use as well. Again, it helps to see where if the trend is actually pointing lower or higher. But I think we're going to touch on this the next time when we have this sort of continuation of indicators. So we have a few more for you guys. So we're going to do at least one session on indicators. We want to do at least one session on trading psychology. We want to talk about how to set up rules, how to adhere to those rules. And we have a couple of more surprises coming up.
Absolutely. Like I said, this is only the very first episode. We will be doing a lot more. We actually got one scheduled on the 27th. I think we're doing the next one, aren't we? I think that's the fundamental analysis, aren't we? Okay. Yeah. So don't worry. This is just just a beginning of the amazing new series, which I hope you're going to find everybody out there very informative and very useful to your helping you learn more with your trading. So Kaia, thank you so much. I think it's been great.
James. Likewise, appreciate your time, and thanks everyone for logging in.
Absolutely. Thank you, everybody, again for joining us. Can I wish you either a good afternoon, good evening, or good day, depending where you are around the world. Remember, before I sign off, this was for educational purposes only, no way to be taken as advice. I always suggest you do your own research and do your own diligence and know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.